Good afternoon, Swing Chat traders. This is Trader Swift. It's Tuesday, August 20th, and I'm going to give a quick market update. All right. Well, we had a little bit of a downward action today, but that was after a long day of low volume consolidation. On the QQQs, looking at the 10-minute mark, you can see that it actually did spend most of the day today, below this 188.31 area that I had previously identified. It did come back up, mid-morning, test that, ultimately rejected it, and then broke down, closing at the low of the day. But the volume, on the other hand, was low, so it's just kind of hanging out there. What that low volume tells me is there's not a lot of buying and selling going on. At a price like this, you would want to see buyers, and if buyers were stepping in, that would be driving up the price, and then ultimately driving up the price into this bullish range. As I've mentioned several times, if we make it into this bullish range, we will have the potential to go back up and retest these highs again. One other thing I did notice today on the QQQs is that we did actually test that 50-day moving average. I don't know if you can see that, but we really did. We touched it, and then we backed off. So that alone, or that as an indication itself, just tells me that the market doesn't want to get into higher prices, and could mean more downward action here. Also, we did close below yesterday's low, which is something I do look for. I look for, are we closing below the previous day or above? So we do have a lower high and a lower low today. So that could potentially be setting us up for more downward action tomorrow. Looking at the SPY, very much of the same. The SPY broke yesterday's low much quicker in the day, much earlier in the day, but the SPY has been weaker than QQQ, and that was showing itself today. And then as well as the IWM, which has been weak, it barely even made it up to the low of yesterday. It actually tested that low and got rejected. So just looking at that, looks like it opened below it, gapped down a little bit, ultimately kind of tested it, and then backed right off, again closing at the lower area as well. But all three indexes is on lighter volume. With today's action, that lighter volume doesn't really tell me much day to day, but just kind of looking at the broader picture, if you look at the downward momentum starting on July 31st, we came down strong and hard over a few days on high accelerating volume. In the past 2 weeks, we have been retracing and just kind of hanging out here in this consolidation area. This consolidation has been on lighter volume, so that broader picture does tell me that it will likely want to go back and test at least this swing point, and then if we do break through that, we could very well revisit these lower June lows. And then if I scale out a little bit, which I've done a few times, if we test that, consolidate there for a while, and ultimately break down, we could revisit the low lows of that happened at the end of 2018. I think that's unlikely. I think it's likely that we'll definitely come back and test this 179 area. And then we'll just have to wait and see. If it comes in with lighter volume here, much lighter than the volume that we saw here, there may be a likelihood that it doesn't break through. And then if it consolidates a bit down here at the bottom of the range, and then ultimately we could find ourselves continue the uptrend. So also, it may not get back down there. We may come back in, and it may reject this area, this 183.62 area. So that's something else I'll be looking for. And that would paint a case that hey, we're making our way up, and it's just going to be consolidating for a while. So that's just something to keep in mind. While we're consolidating or while we're just having the sideways action, it is really important that you're trading small, that you're not really taking a lot of risk right now. There's a time and place to take risk. When the market is trending, if we look at earlier in the year when it was trending up, that's a great time. If you look at after June, May, June, and part of July, we were in a trend. That's another better time to take risk. But when the market is choppy like this, when you have huge gap ups and gap downs on market open, you're just gonna waste money stopping out. So it's better to trade small, trade lightly, if you're trading at all. There's a lot of swing traders out there that decide to just sit on the sidelines until the trend has revealed itself. If you're that type of trader and you're looking just to sit on the sidelines, I would probably actually wait until it firmly breaks above this area, this 188 area, and not really try to catch it down here. But if you're trying to learn and willing to take a bit more risk, just do so with caution is all I'm saying. Okay, moving into various positions. So right now I have two open long positions. CrowdStrike, which held up well today. We actually did make new highs, but it quickly came back to break even, and to almost flat for the day. I'm still in it, and I have a break even stop around the 96. 90 or low 96 area. I can't even remember, but I have a break even stop set. So I'm not going to lose money on this trade unless it gaps down really, really largely, and that's okay. So we'll just wait and see there. ARWR, as I talked about, I had a much larger position. I sold 80% yesterday, at the high, almost near. It was like 33.90 something, so almost near the high. So I had a great exit there. It decided to rest today. What was very encouraging today that my remaining 20% held up very well. Looks like it closed completely flat, which is interesting. But I was up a bit, I was down a bit. Nothing I'm too concerned about. I bought all the way down here around the 30 something area. So my plan is actually to just stay in this for the longer term, and ideally ride it all the way to earnings. But I am going to be watching it. If it pulls back a bit more, I may pick up some more shares again on weakness. I have two short positions. I'll start with Tesla. And, that was a short position based on a couple puts I bought. And that's just more so just to protect myself. My Tesla puts were up slightly today, but not much. Not much at all. So those were basically flat for the day. And then Beyond Meat, I have some puts, and I bought it, on the rejection of around this area, this 147 area. But hey, lucky me, the stock was upgraded today, and it had a big day. It was up 6.55%, based on a JP Morgan upgrade. But ultimately I decided to stay in it. I was going to watch it a bit more. If it did break above this area, this 162 area, I probably would have closed out that those couple puts that I have. But for the time being, given the broader market weakness, and I'm still thinking that the broader market is going to break down over the next week or so. And because Beyond Meat has been so weak in the since earnings, this is a candidate to break down probably to the 120 area as my price target. So I consider today's upgrade just bad luck on my part. But again, I don't feel like the trend is invalidated yet, so I'm going to stick in it. And just kind of because of my other positions, my ARWR, and my crowd strike positions, I'm still well in the green as far as all my open positions go. So I'll that's fine. What I don't want to be is losing money. So if those weaken up, I may decide to take that off as well, just to keep my portfolio marching in the right direction. But if I was watching the 10 minute a lot today. I was getting pretty happy when it was starting to break down the low of the day. Then it had this slow march up, which I've seen this before, and I've been seeing it more and more often. To me, this looks like algorithmic trading. When the volume was low, just kind of very uniform, slow march up. Probably, I don't know. Some larger institution maybe picking up a longer position, but I do like how the day ended. It did end rejecting this area, which was the sort of the support, key first level support that I identified earlier in the day. And it broke down below that, so I'm expecting it to continue lower, but we'll see. If it keeps on an upward trend, I'm going to have to cut losses. What I don't, I don't trade options a lot, but what I don't do is I very, very rarely hold options out for the long term. It's not a all or nothing kind of thing. If the underlying stock is not trending the way I expect it to, I'm just going to cut it because those options cost money, and I'd rather not lose more money. One thing that helped me a bit is the options that I did buy, or the puts that I did buy. I bought the September puts, so they do expire, I believe, September 20th. They're the monthly puts, and I bought them in the money. So while I did get hit, I think my position was only down about 25% or so, which isn't too bad. I know if I bought the weekly puts yesterday, which are a lot cheaper, if I bought the weekly puts, I'd probably be down several 100% on my, not several, probably like 75-80% on the whole thing, which that would be much worse. So that is one reason why I do buy puts a little further out into the future, and then also I'm not day trading them necessarily. I'm swing trading them. So when I do buy options, I buy the ones that are in the money out in the future, so that I'm not burned by the time decay. I still only plan to hold this probably 1 to 2 weeks max. So I'm not going to let that time decay impact me. But then again, this thing has to move, and if it's not moving in the direction that I intended, I've got to get rid of it. Okay. Moving on to other stocks. So a lot of the stocks that I have held recently, Team AYX, Coupa, Okta, Smartsheet, those all acted very well today. Funny enough, most of these I sold out yesterday in an effort to protect myself. And one of the funniest ones is Okta. So Okta's been one of the weakest ones in my portfolio over the last few weeks, and I've been considering getting rid of it the last couple days because it has failed to close above that 50-day. But hey, today on this weekday of the market, Okta was the one stock that decided to be the strongest, and of that lot I was telling you about, and it finally did close above the 50-day. Now, normally in normal conditions, I would probably want to get in again. Maybe off that rejection or off taking out highs from from the last few days. But given that it's earnings next week, and the market is weak, I'm just going to have to wait it out now. I missed today's move. Today would have been a better day to get out of it, but hey, you don't have you don't get everything. Team acted very well. It held up well. Again, I like it above this 144 area. AYX, I actually did buy it today around the 134 area, and I wrote it up and then wrote it back down and stopped out, and that all happened very quickly. Yeah, it was all within this 10 minutes here. I wrote it up, and because it ran so far, I went ahead and set my stop break even. And just because, hey, the market's been so choppy, I'm not really in the mood right now to lose money. And, what do you know? It jumped back down and tested that level, broke below. My stop probably contributed to that. Probably everyone else had their stop there, and, I got stopped out. And then, hey, it found a footing again. I really just didn't have the patience, desire, I don't know what you call it, to get back in. I did watch it. I saw it consolidate here. I saw it break above these candles. I thought about getting in. I saw it break above that high of that first up thrust. Thought about getting in again. It's just not worth it in a market like this. I figure, it'll be here for me another day to trade. If we have a couple down days, which on the broader indexes of what I'm expecting, we could very easily go back and test that 134 area again. And if it breaks below here again, we could also very easily go back and test some of these other areas, maybe a 127, 123, or a potential just 120 area. So, I'm going to keep an eye on it. What I did notice also very early on was the volume was not convincing on AYX. So, yeah, I want to buy breakouts on high volume, and it just wasn't there today for AYX. So that's what contributed to me deciding to not get in. Again, Coupa held up well, looks great. Smartsheet did really well. This would have been a good trade above this line here, which is this prior swing point that I talk about a lot, this 49 area. Let's look at the 10 minute. Let's see when it did it. And that was very early on. That was within the first 30 minutes. You could have taken the trade right at, right around at 10, and had a great day trading with that today. This was on lighter volume. Again, it'll probably come back and retest this, if the market is weaker. But what would be great to see with this is, okay, we've had this run up, see it consolidate here for a while, and then when it breaks these highs here around this 51 area, 5160 area, that would be a nice move up to the prior highs. And so that's definitely something to keep watching. Shopify held up well today. Shopify had great volume today. That tells me there's conviction. Shopify could likely see higher prices soon. The only kind of drawback here is that the overall market is choppy and weak. That doesn't necessarily mean Shopify is going to be slowed down, but keep that in mind. But we did have accelerating volume, and we did close slightly above that prior swing point. So, hey, congrats if you're in Shopify. I think the same thing with Paysign. Yeah, so we had a continuation from that breakout of this level right here yesterday. Wide price spread, heavy volume, accelerating volume. Those are all the things I look for to tell me that a stock is healthy. Paysign definitely wants to retest these highs of 1869. So if you're in it, no problem staying in it. Given the weakness of the market, it may make sense to take some of it off, maybe sell half, or at least some percentage of it, so that you can lock in some profit. Also, if you're in it, continue to move up your stops. Your stops probably should be below the day. the low of the day. So tomorrow, your stop should be the low of today's um, candle. That's the way I typically trade it. Neo held up well at the highs, looks good. Zscaler continued to break down. C Technologies, they had earnings. They got hit pretty hard, so they were down 8.59%, but looks like they found support and closed right at that prior support level that we've been talking about. Yeah, this could be a good buy, and if the market conditions were better, I probably would have bought some here and then put my stop below today's low. So if it does break down below, if it does break, well, sorry, I would have tried to buy closer to the swing point and then have my stop below today's low. So if it did break down below this, then there's not a lot of downside, but upside, it could definitely go back and revisit the highs if it does find a footing, especially if it breaks back above that 50-day moving average. Which it's very common for these market leaders that have been running to get hit at earnings. Even if the earnings are good, I usually do like to go back and look to see what numbers they put up, but a lot of times the numbers are good and they still get hit, and those are the opportunities I look for to buy, especially when they're at a key swing point that had been already identified prior. AMD looks like it's just still consolidating in this range. Zendesk still building that bear flag down. Lower prices probably in store. Roku sitting right up at the highs, low volume day. It thought about breaking out today, but hey, the rest of the market wasn't moving, so it's just resting up there. Rapid7 looks like we did breach this prior swing point that we have identified, setting up our ABCD structure down, but it did close right at it. So we'll see what happens. If it continues to reject this price tomorrow, we could definitely continue to see downside movement on that. Zscaler, more downside action. CyberArk, more downside action. Twilio, just kind of sitting there consolidating, not interesting. MongoDB, kind of the same thing, consolidating, but it's been consolidating in this broader range. I think I pointed this out a couple videos ago. This kind of looks like a mini head and shoulder here, or maybe a big head and shoulder. We have a shoulder, we have a head, we have another shoulder. If it starts to break some of these key levels, maybe here, we could see lower prices. But overall, it's held up fairly well lately, but it's not ready to buy. Again, I don't like it until it's above this 154 area. Zoom, messy. Chart looks okay, but it's just so volatile. I don't like to trade a lot of volatile stocks. I consider CrowdStrike's chart to be very similar, so that's the one I've decided to trade. I'll just keep it at that. Boeing, let's see. Doesn't look good. More downside action. Slack. Well, Slack had a good day yesterday and then gave it up today. Continuing downward motion. Disney. Still consolidating. Workday. Just hanging out there. So as you can see, the first few stocks that I talked about, all the stocks that I like to trade, their charts still look good, but there's a lot of stocks that their charts just look awful, and that's contributing to the broader market downside. So I'm continuing to weed them out and just kind of shove them down. And then a lot of these stocks, particularly all these last few ones that I've talked about, they were the leaders. You see this really nice movement up, but once it broke down, once it broke that trend, I'm not really interested. But I'll keep an eye on it because a lot of these are in the same sectors, and they could regain momentum. So I just want to keep an eye on them. But yeah, so it's important to build your watch list and then just watch how they act, so you know what is normal and what's not normal. And for a lot of these, it's not normal action, which again is another sign we should be cautious. Fiverr looks like it's continuing to get a bit of that curl up. I'm not a buy the dip kind of person, but I don't know. Maybe there's opportunity there. I'm not going to buy it. Tuffin looks like it's consolidating. Probably could see more downside. I mean, it's just right at the lows. How far is this going to go? What I'm more interested in is just to let earnings happen in 2 weeks, and then maybe that's a catalyst for a recovery, and then maybe it could start a trend again. But for now, probably for the foreseeable future, not interested. Garden Health, little different industry than software, but hey, trend still looks good. Bitcoin's not doing a lot. It's just we've got this. I don't talk a lot about patterns. There has been some discussion in Swing Chat about other patterns, other than ABCD. This may be a good place to demonstrate it. So we do have potentially a big ABCD forming. So with A point, B point, C point, and then D point, would be way up here, probably around the 20,000 mark, which would revisit the highs of Bitcoin. But this could also be a sort of a descending triangle here. So we've got this one here. So we'll have to watch. Does it break through this area, or does it ultimately break down below this level? So have to see if it does break above this area. That could be a potential buy rather than waiting for that B point cross. But or if you wanted to try to pick it up here, sort of more range bound trading, you could try to pick it up right around that support level with a stop right below that, because if it does break below that, you don't want to be holding it, because that support has been so strong. If that breaks, we're going to see much lower prices. So just something to keep an eye on. Watch and learn. Ball Corp, has been strong. I haven't been watching this too long, but looks like it's hanging right up there at the highs. Volume still fairly low. We haven't had a really high volume day since this one, so this is probably the key level I'd be looking for. Ideally, I would like it to retrace back here, and then potentially buy some of that. Ring Central, same story. It's just kind of consolidating. So A point, B point, we'll consolidate here. When we break that B point, this could be another buy. But yeah, Ring Central looks pretty good. Good long-term trend, and I know they're making money as a company. Yeah, that's it in a nutshell. We're still in a consolidation range. We should be cautious, and you should be trading small, and not overly taking risk right now. So hopefully I've taught you a few things, and just remember, this is the way I trade. This is something I've developed over the years. I've read a lot of books. I've taken a lot of advice from different people, and I've just kind of figured out what works for me. You've got to go on that journey yourself, and no matter how far along you are, just realize it can take several years, 3 years, 5 years even, before it really starts to make sense. And so your goal here should just be how can you make sure that your account is around tomorrow. Also, make sure that you have the energy to continue tomorrow. On days like today, these slow days, just go take a break. I probably watched a little too closely today, but I was just mostly interested in what was going to happen with Beyond Meat. But other than that, it would have been a much better day to do something else, honestly. So, and not every day in the market's exciting, but watch and learn, and every day there's something to learn, and you know, uh, keep on keeping on. So, thanks a lot, and if you like this, show me that you like this by giving me a nice thumbs up on YouTube, and I appreciate that because that will just help me be found and ultimately reach out to more people, help more people. So take care, and I'll see you tomorrow.